Role of financial managers. First, let us know what is financial manager. Financial manager perform data analysis and advise senior managers on profit maximizing ideas. Financial managers are responsible for the financial health of an organization. They produce financial reports, direct investment activities, and develop strategies and plans for the long-term financial goals of their organization. Financial managers works in many places including banks and insurance companies. Financial managers have the responsibility of overseeing the finances of major companies, agencies, and everything in between, along with their teams. Task of financial managers. Number 1 is prepare the financial statements, business activity reports, and forecasts. Financial statements and forecasts show how your business has been performing and how you think it will perform over time. Financial statements are historical. They show you how your business has been operating, for example, in terms of profitability, cash flow, assets, and liabilities. Financial forecasts, on the other hand, look to the future. They project a financial situation you should be aiming for. And other tasks of a financial managers are monitoring financial details to ensure the legal requirements are met, supervise employees who do financial reporting and budgeting, review company financial reports and seek ways to reduce costs, analyze market trends to find opportunities for expansion or for acquiring other companies, and help management make financial decisions. Types of financial manager. Number 1 is the controller. Direct the preparation of financial reports that summarize and forecast the organization's financial position. Controller is an individual who has responsibility for all accounting-related activities including high-level accounting, managerial accounting, and finance activities within a company. A financial controller typically reports to a firm's chief financial officer or CFO, although these two positions may be combined in smaller businesses. The duties of a controller include assisting with the preparation of the operating budgets, overseeing financial reporting, and performing essential duties relating to payroll. Treasurers and finance officers direct the organization's budget to meet its financial goals and oversee the investment of funds. Treasurer is responsible for ensuring that effective financial systems and procedures have been established, are being consistently followed, and are in the line with best practice and legal requirements. The next one is credit managers. Credit managers oversee the firm's credit business. Credit managers are responsible for overseeing the credit granting process for a company. Their job is to optimize company sales and reduce bad debt losses by maintaining the credit policy. They do this by assessing the creditworthiness of potential customers and conducting periodic reviews of existing customers. Cash managers. Being a cash manager ensures all actions are in compliance to state financial laws. Cash managers monitor and control the flow of the cash that comes in and goes out of the company to meet the company's business and investment needs. Risk managers. Risk managers control financial risk by using the hedging and other strategies to limit or offset the probability of financial loss or a company's exposure to financial uncertainty. They coordinate loss control systems for organizations and businesses, which may include disaster recovery plans and emergency evacuations. Insurance managers. Insurance managers will attempt to reduce risk and maintain low loss ratios in order to keep the company profitable. Insurance managers decide how best to limit companies' losses by obtaining insurance against risks, such as the need to make the disability payments for an employee who gets hurt on the job or costs imposed by the lawsuit against the company. Important skills of financial managers. Number 1 is analytical skills. Financial managers must have analytical skills to investigate the root cause of a problem and work toward a solution in an organization. Number two is communication. An effective finance manager must have strong written and verbal communication skills to be able to explain complicated formulas or analysis to present information in an accessible way or manner. Attention to details. Since they oversee how and where company spends its money, as well as where it accumulates profit, financial managers or finance managers must divide their attention to many financial functions of a business. Math skills. Financial managers must be skilled in math, including algebra. An understanding of international finance and complex financial documents is also important. The last one is organization skills. Organizational skills are some of the most important and transferable job skills an employee can acquire. They encompass a set of capabilities that help a person plan, prioritize, and achieve his or her goals, which in turn can save a company time and money.
So ngayon naman, let's discuss kung ano ba yung importance or what are the importance of financial management. So, si financial management, siya yung nagpro-provide ng pathway to attain the goal and objectives in an organization. Dahil na hindi naman mangyayari ito kung una pa lang is wala ng fund. Kasi may pera pa din umiikot every time you or we have a goal in an organization. Siya din yung dahilan para mas maging easier yung choices or decision when it comes to investment, operating mechanism, and of course, financial policies, which is yun yung regulation, supervision, and oversight ng financial and payment system ng isang organization or ng isang company. It is also important because the financial management make sure to maximize the profits or yung kinikita, and of course, yung stockholder and shareholder, which is sila yung may share. Kaya nga shareholder, di ba? Kasi may hawak silang share dun sa kita ng kumpanya or ng organization. Siyempre, hindi lang profits and shareholder yung tinitingnan nila. Tinitingnan din nila yung customer service, lalo na't nakadepend din dun yung income or yung pasok ng pera. They also actively participating in present societal concern or things that concern the society. And lastly, minimizing the bankruptcy risk. Kasi nga diba hawak nila or ng financial management yung report patungkol sa pera. So sila yung unang nakakaalam kung malapit na bang malugi or nasa bingit na sila ng bangin para malugi. And syempre kapag nakita na nila, they will take an action to prevent that thing to happen. So, the following are other importance of financial management. So, let's start with, it provides guidance in financial planning. So, dito, inaalam na nila what are the short-term and long-term financial goals of their organization. And then, ginagay nila syempre toward the achievement. Second, it assists acquiring funds from different sources. So, they also help to develop the funds from different sources kung saan sila, of course, magigain. Next, it helps in investing an appropriate amount of funds. They make sure na with the appropriate amount, kikita sila, hindi naman basta-basta ka lang mag-i-invest ng pera at baka maging dahilan pa yun para malugi yung isang kumpanya. Next is, it increases organizational efficiency. Next, it reduces delay production. It cut down financial costs, so hawak nila ang pera. So basically, sila din yung nagpapasimula ng production. So para hindi madelay, nandiyan si financial management para i-clear na lahat ng kailangan para makapag-produce. So, next, it cut down financial costs. So nililess din nila yung financial cost, which is yung borrowing of money to build or purchase an asset. Next, it reduces cost of fund. It ensures proper use of fund, just like what I said a while ago. It helps business firm to take financial decisions. It prepares guidelines for earning maximum profits with minimum cost. It increases shareholders' wealth. It can control the financial aspect of the business. It provides information through financial reporting. And lastly, it makes the employees aware of saving funds. So that's all for the importance. So next naman guys, I will explain to you yung functional statement. So sila naman yung nag-emphasize ng importance of financial management. Sila din yung nagko-control ng techniques that measure the financial soundness, management effectiveness, and many more. So let's start with the break-even chart. So this is used by the organization's financial management planners and accountants to identify how the various sales level affect the income and profits of the firm. So they are the helpful tool for us or for the company to determine in which part of the company new product or services kikita yung kumpanya. In another word, these break-even analysis show how many sales it take para mabayaran yung cost of doing business. As in, lahat ng expenses sa business na gagastos during its run or nasa process ka of conducting the business. It also determines what level of sales are necessary para makover up all the company's total fixed costs, or the cost does not change with an increase or decrease. So, yun yung ibig sabihin ng fixed cost. So, next, break-even point is the level of operation which shows equal income and expenses incurred by the company. So, the break-even point is the point wherein the total cost and revenue are even. So, in short, walang net loss or gain. This means that the company only bringing the same amount ng money para makover lahat ng expenses sa company or an organization. So, the BEP or the break-even point determined by dividing the total fixed cost of the company and the total revenue. So, next one naman is the financial statement. So, it includes income statement, balance sheet, and cash flow statement which are carefully analyzed. So, financial statement, ito yung formal records ng lahat ng financial activities and position ng business. So, financial statement include first, income statement. So, well, basically, income statement focuses on company's revenues and expenses. Expenses are subtracted from the revenues and then makukuha na natin yung amount ng income or tinatawag din natin siyang net income. Next is the balance sheet naman. Siya naman yung nagpo-provide ng overview sa asset or yung mga bagay kung saan kumikita pa yung kumpanya. And tapos liabilities. Si liabilities naman is yung utang and obligation ng business. And lastly, stockholders equity or kilala din sa tawag na net worth, net assets, capital. So, si equity naman, ito naman yung remaining assets sa business after all the liabilities have been settled. So, ang formula para dito is asset minus liabilities. And then, the last one is the cash flow statement. Dito naman isinasummarize niya yung amount of cash na pumapasok at lumalabas sa kumpanya. So, financial ratios makes use of the above-mentioned financial statement to determine the formulation of the series of ratio that will, in turn, determine if the company is stable or unstable, strong or weak, and on the road of bankruptcy. So, financial ratio is a helpful tool to gather valuable insight into business liquidity. So, ito yung tumutukoy sa kung gaano kadali ang assets ng kumpanya para ma-turn into cash. Operational efficiency and profitability. Sa pamamagitan ng financial statement, so basically silang dalawa yung magka-partners. So, kapag wala si financial statement, hindi natin makukuha si ratio. So, ito din yung makakapagsasabi kung stable or unstable ba yung kumpanya. So, example ng financial ratios are return on investment or ROI, return on assets or ROA, debt to equity, and many more. So, next one, organization's budget. This states the amount of money that the company will spend and receive during a future period of time. So lastly, see budget. So it is the tool used in planning and controlling within organization. Ini-estimate niya yung revenue and expenses over a specific period of time. So dito pa lang malalaman na yung mga expenses na gagawin all through the year, and it is prepared on hand. So that's end our reporting about financial management. Thank you for listening.